Welcome back to Dinar Community, where we bring you the biggest currency developments you won't hear on the mainstream news. Imagine this for a moment. You fall asleep with a modest stack of Vietnamese dong tucked away in a safe, maybe something you purchased months or years ago just in case. You wake up the next morning and suddenly you're staring at a small fortune. No hype, no forum rumors, no baseless theories. This isn't another speculative headline meant to keep people hanging on. False hope. This is very real and it's unfolding as we speak. The Vietnamese dong has officially revalued and the move has sent a tidal wave through the financial sector. Banks, ports, platforms, and global markets are still scrambling to keep up. This could very well be the single biggest surprise of 2025 in the world of international finance. But make no mistake, this is only the beginning. In today's deep dive, we'll explain exactly what happened, why it matters so much, and what immediate steps you need to take if you hold Vietnamese dong. Stick with us. You won't want to miss a single detail of this unfolding currency revolution. On the early morning of May 2025, something historic happened, something that rocked the financial world to its core. Without warning, without leaks, and with almost surgical precision, the Vietnamese dong underwent a monumental revaluation. The shift was anything but subtle. What had previously been an exchange rate of approximately 23,500 dong per $1 was now showing a radically different number, 1,200 dong per $. This wasn't some minor adjustment or trial rate. It was live. It was confirmed, and it had already taken hold inside some of the largest banking systems in the world. Internal platforms used by major institutions such as HSBC and Citibank began reflecting the new rate almost instantly. The reaction was immediate. Investors, governments, and everyday holders of VND scrambled for answers. Currency desks lit up with activity as traders attempted to assess the impact. The entire marketplace was thrown into a tailspin, unable to fully grasp how such a massive adjustment had occurred, without any forewarning from financial authorities or international agencies. What makes this event even more shocking isn't just the magnitude of the rate change, but the method by which it was rolled out. There were no grand announcements, no hints or countdowns, no whispers in financial media. This was a textbook case of stealth execution. At exactly 33 a.m. GMT, internal banking systems quietly began updating their figures to reflect the new VND value. Screens that previously showed a sleepy, stagnant rate suddenly spiked. Traders, analysts, and bank insiders took to social media almost instantly. Screenshots from internal dashboards of banks like HSBC, Standard Chartered, and Citibank started making rounds online. Within minutes, Forex trading platforms began halting VND activity altogether, citing abnormal volatility and unexpected shifts in their back-end calculations. Bank alerts and internal notices flagged recalibration events without providing specifics. This wasn't a domestic policy change executed by Vietnam in isolation. It appeared to be a globally coordinated financial move likely agreed upon by multiple entities in private. The timing, precision, and secrecy all suggest a much bigger game at play than anyone expected. For years, individual investors, especially those following alternative financial media, have quietly acquired Vietnamese dong, hoping for a long shot revaluation. Most were laughed off or dismissed as fringe thinkers. Today, they're the ones smiling. The new exchange rate has effectively changed the lives of thousands who had the foresight to hold on to their dong. A simple $500 investment that once gave you around 11 million Vietnamese dongs at the current rate that could now equate to over 990. And that's 00, and that's just on a retail exchange level. Some estimates suggest higher returns for those who engage in private exchanges or institutional intake programs. As word spreads, holders are rushing to confirm the authenticity of their currency, secure appointments with foreign exchange desks, and reach out to private bankers. However, it's not a situation where you can simply walk into your neighborhood bank and cash out. The transition is being handled with extreme caution. Early reports suggest public exchanges are limited and banks are prioritizing clients with large holdings, prior relationships, or institutional accounts. This is no casual cash in event. It's a strategic, measured rollout. What we're seeing now is not a free-for-all, but a highly controlled rollout. Early access appears to be limited to institutional clients, VIP customers, and private banking members. Screens inside these banking sectors reflect the updated value, while public F-facing systems, such as ATMs, branch displays, and most online banking interfaces are still showing outdated rates. Some systems are simply down altogether, displaying maintenance messages or vague errors. This strategic tiered deployment suggests a carefully planned liquidity management system. It appears authorities want to avoid overwhelming the financial infrastructure or causing panic in cashew markets. Those who understand how to ask the right questions or access the right financial departments are gaining early insight. Many are being invited to discreet consultations, asset verifications, and private review sessions. Foreign currency intake desks, usually obscure departments, are now the epicenter of quiet activity. It's becoming clear that being an informed and well-prepared holder makes all the difference in this environment. Those who wait for mainstream coverage might miss the crucial window for action entirely. Interestingly, this historic event didn't come without a few subtle signs, though they were easy to miss. Over the past several weeks, major U.S. banks have implemented mysterious system updates that now seem tied directly to this revaluation. Chase Bank, for instance, added new back-end modules under a category called exotic rate tiering. At the time, most assumed it was a technical enhancement or routine compliance tweak, but now insiders claim it was part of a larger readiness effort. Similarly, Bank of America and Wells Fargo recently rolled out updates to their mobile platforms. Hidden within those patches were new API call functions related to foreign asset management, which are now believed to be integral to VND handling. These weren't random updates. They were precise, timed, and intentionally quiet. While no official confirmations have come from these institutions, sources close to internal operations indicate these were preemptive alignments. Someone knew something and they were preparing for it without tipping off the public or inviting speculative surges. The global silence surrounding this event speaks volumes. The International Monetary Fund (IMF) issued a brief statement acknowledging what they called ongoing regional currency realignments. They didn't name Vietnam directly, but the timing was far too coincidental. As for the Vietnamese government, even more mysterious. Within hours of the new raid appearing in financial systems, key government websites went offline for scheduled maintenance. This included the Ministry of Finance and the State Bank of Vietnam. A bulletin that briefly appeared confirming the new value was swiftly removed, vanishing within just 20 minutes. This isn't the kind of behavior that accompanies small policy shifts. This is deliberate information control. Analysts now believe the silence is intentional, part of a coordinated global response designed to allow private handling of large volumes of currency before the public is officially brought into the loop. The lack of denial paired with digital footprints and institutional adjustments serves as a de facto confirmation. Something massive has occurred and it's being managed at the highest levels. The question on everyone's mind is why Vietnam and why now. For years, economists have argued that the Vietnamese dong was severely undervalued when compared to the country's real economic performance. Vietnam has one of the fastest growing economies in Southeast Asia with robust manufacturing, a booming export market, and increasingly favorable trade relationships. The previous exchange rate simply didn't reflect its real position in the global economic ecosystem. Many have long suspected that The low rate served certain strategic purposes, especially in exports. But the pressure to adjust has been building, with inflation moderating in Vietnam, gaining stronger footholds in global trade. The justification for a suppressed currency weakened. The recent revaluation is seen by some as a long overdue correction. It also coincides with major trade deals and economic development programs that require stronger currency standing. Ultimately, the decision to revalue appears to be both strategic and inevitable. Vietnam is stepping into a new financial era, and this revaluation is a bold declaration of that reality. With the Vietnamese dong now revalued, attention has rapidly shifted toward the next big possibility, the Iraqi dinar. For years, the IQD has been at the heart of speculative conversations, some credible, others not. But what happened with Vietnam changes the game. It shows that stealthy revaluations can happen, that global banks can coordinate silently, and that markets can adjust without advanced notice. Iraq, like Vietnam, has vast economic potential. Its oil reserves, strategic geographic position, and ongoing partnerships with international institutions all suggest a currency realignment could be on the horizon. If Vietnam could execute such a shift with precision, could Iraq be next? That question is no longer hypothetical. It's now a serious discussion inside currency circles, private banking offices, and intelligence briefings. The world is watching, and those holding IQD are revisiting their strategies, analyzing timing, and preparing for what may come next. After Vietnam, anything seems possible. If you're holding Vietnamese dong today, the steps you take in the next 48 hours could shape your financial future. First and foremost, verify your currency. Ensure that your notes are authentic, undamaged, and stored safely. Next, reach out to your bankbot. Be strategic. Avoid buzzwords like RV or revaluation. Instead, inquire about foreign asset intake, private currency exchange services, or exotic currency departments. Many financial institutions now have internal programs specifically for this type of event, but they don't advertise them publicly. Also, monitor your inbox and spam folder. Some VND holders are receiving quiet invitations labeled foreign asset review or currency intake appointment. If you receive one, take it seriously. Finally, maintain professionalism. Banks and financial entities prefer to work with informed, composed clients. The system is built to serve those who understand it, not those who panic. If you treat this like a serious financial transaction and not a viral moment, you'll be better positioned to navigate the opportunities ahead. Stay smart, stay alert, and most of all, stay ready. As news of the Vietnamese dong's revaluation spreads like wildfire, so do the opportunists who see panic and confusion as a doorway to deception. Scammers are already mobilizing, targeting hopeful investors with promises of instant wealth or guaranteed exchanges at so-called private rates. These fraudulent offers may seem tempting, especially when panic sets in and people fear they'll miss out. But here's a hard truth. If someone promises you a backdoor deal or an off-the-books rate, they are most likely setting a trap. Any legitimate exchange of this magnitude will happen through official, regulated channels. That means banks, licensed Forex brokers, and established institutions, not random Telegram chats, WhatsApp AP groups, or flashy websites asking for personal information. Now is not the time for shortcuts or risky deals. It's a time for clarity and caution. Always double check sources. Do not send money to unverified platforms. If something feels off, it probably is. In a moment where real wealth may be changing hands, the last thing you want is to fall victim to a scam and lose everything. Be wise, be guarded, and only deal with trusted financial institutions. Vietnam's sudden and stealthy revaluation has not only shocked currency watchers, it has shaken the entire Southeast Asian financial order. By dramatically increasing the value of its currency, Vietnam has introduced a whole new dynamic to the regional economic landscape. Countries like Indonesia, Thailand, the Philippines, and even Malaysia now face pressure to maintain competitiveness in both trade and foreign investment. A stronger Vietnamese dong makes Vietnamese exports more expensive, which could shift global supply chain strategies. To maintain balance, other nations may be forced to reconsider their own currency strategies, whether that means revaluations, currency tightening, or new monetary policies altogether. What we're witnessing may not be an isolated event. It may be the first move in a synchronized regional currency adjustment. Central banks are watching, markets are responding, policymakers are evaluating the potential domino effect. This shift is far from over, and the implications go well beyond Southeast Asia. The financial realignment that many thought was impossible or decades away is happening in real time. And it all began with one calculated quiet move from Vietnam. Expect more moves, expect more surprises. For years, revaluations have lived in the realm of speculation, dismissed by many as myths or internet rumors. But with Vietnam's confirmed revaluation, those doubts are gone. What once seemed like fantasy is now concrete reality. The world didn't grind to a halt. The financial system didn't collapse. Instead, a global currency was adjusted in real time, without warning, and the system adapted seamlessly. Banks updated their systems, markets adjusted, and individuals holding Vietnamese dong saw their patience pay off. This event proves one thing with crystal clarity: silent, coordinated, monetary resets are not only possible, they are now part of our modern financial toolkit. Going forward, every currency watcher, investor, and economist must recalibrate their thinking. If Vietnam could carry out a revaluation this cleanly, who else might be preparing for the same? The spotlight now turns toward currencies like the Iraqi Dinar, which has long been whispered about in similar circles. Whether you're holding VND, ICD, or simply observing from the sidelines, understand this: the rules just changed. The old system is evolving. Stay sharp, stay flexible, and above all, stay informed. If this video helped open your eyes to what's really happening behind the curtain of the global financial system, then help us keep the truth flowing. Hit the like button, share this video with fellow currency holders or curious minds, and don't forget to subscribe to Dinar Insights. We're not here to hype, we're here to inform, investigate, and uncover the stories the mainstream refuses to touch. From verified revaluations to hidden banking system updates, we bring you the updates that matter clearly, calmly, and accurately. As this global currency shift unfolds, we'll be right here, providing real-time insights, updates, and strategy so you can move with wisdom, not fear. Whether you're holding Vietnamese dong, watching developments with the Iraqi dinar, or simply trying to stay ahead of what's next, you've come to the right place. Thank you for being part of our community. Stay prepared, stay alert, and always remember, true opportunity doesn't come in loud headlines. It comes quietly in the margins before the world even knows what happened, and then it changes everything. We'll see you in the next update.